silver has been suppressed by China in terms of price for years. The Silver Institute reckons that it's been in supply deficit for the last 5 or 6 years. And the only thing that makes up the difference is something called investment. So you've got investors, if you like, supplying the silver. I think, first of all, President Trump's wonderful tariffs and his attack on China has woken China up to the fact that, you can't deal with this guy. The government is subsidizing and encouraging major conglomerates in India to manufacture photovoltaic cells. So you have the situation where Reliance Industries, for example, is producing the most enormous quantity of photovoltaic cells. They're generating electricity out of these things, and they are demanding huge quantities of silver. And where do they go for it? Well, they have to go into the market. So you can see that you've got this squeeze happening. It so happens that China is now in the position where for years 26 and 27, she is introducing a new export licensing regime.
Silver prices are facing mounting pressure after years of artificial suppression, particularly from China's dominance in industrial supply chains. According to the Silver Institute, the silver market has been running a persistent supply deficit for the past 5 to 6 years, with investor holdings quietly filling the gap. That balance is now breaking down. Trade tensions, fueled by President Trump's aggressive tariff stance toward China, have reshaped global manufacturing strategies and accelerated diversification away from Chinese control. Monetary strategist Alasdair Macleod argues that this shortage is now irreversible. India has emerged as a key driver, with government-backed conglomerates such as Reliance Industries ramping up large-scale photovoltaic cell production. Solar manufacturing requires substantial amounts of silver, forcing producers to source metal directly from the open market. This surge in industrial demand is colliding with constrained supply, creating a developing silver squeeze. Adding further pressure, China is preparing to introduce new export licensing rules in 2026 and 2027, potentially restricting global silver flows and amplifying upward price momentum. If you enjoyed this video, like and subscribe to Metal Moves.
Silver has been suppressed by China in terms of price for years. The Silver Institute reckons that it's been in supply deficit for the last 5 or 6 years. And the only thing that makes up the difference is something called investment. So you've got investors, if you like, supplying the silver. Now, within that investment total, I don't think there's an awful lot in terms of genuine investment, but what there is stockpiles. And this particularly includes China. And what China has been doing is that when there is industrial demand around the world, it has been prepared to act as the swing factor to keep the prices suppressed. And that way, of course, the Silver Institute's the calculations then run into balance. China has stopped doing that. I think there are a combination of factors as to, behind it. I think, first of all, President Trump's wonderful tariffs and his attack on China has woken China up to the fact that, you can't deal with this guy. And, the whole of the rare earth thing, which they've got control over, that's the one thing they've got, they've got the West, if you like, in their grasp there. And I think the other thing, as far as China is concerned, is that they can see that demand for silver is now going off the charts, and they're not willing to supply it anymore. The reason it's going off the charts is because India is becoming a major force in terms of silver demand. The Indian economy, I reckon, is roughly where China was about 25, 30 years ago. It is dynamic. It is expanding very rapidly in terms of its productive capacity. And because it has been opening, sort of coal-fired energy stations in big numbers, it's sort of trying to go carbon neutral by 2035. And the way it's doing that is that the government is subsidizing and encouraging major conglomerates in India to manufacture photovoltaic cells. So you have the situation where Reliance Industries, for example, is producing the most enormous quantity of photovoltaic cells. They're generating electricity out of these things, and they are demanding huge quantities of silver. And where do they go for it? Well, they have to go into the market. So you can see that you've got this squeeze happening. It so happens that China is now in the position where for years 26 and 27, she is introducing a new export licensing regime with the explicit purpose of protecting China's own domestic supplies of silver. So this shortage is now showing up in the markets big time. I saw one of, a fellow substacker who is very, very close to the LBMA, has got all the figures and all the rest of it to a greater extent than I have, tweeted this morning, or set a Substack out this morning to the effect that the lease rate in London is back up at 6-7%. The shortage is still there. So what we're seeing is an industry-driven re-rating. And the fascinating thing is that speculator interest or investor interest in the West is minimal. I mean, what's been happening on COMEX is that the open interest in silver has generally been declining. Now, I think there is a bit more, if you like, public interest in silver in Asia, because the Asians, I think, have a greater feeling that silver is a monetary metal and therefore is better than fiat currency. But this hasn't started here yet. And I can see that, with the price soaring today, I mean, as we talk, we're just under $64. People are going to be sitting there on their hands thinking, my goodness, we're missing out on this. What do we do? And, they'll probably try and pile in a market where there is no silver. And it's leading, in my view, to the destruction of the paper silver market. I mean, this is basically what we're seeing, I think, with open interest declining. The shorts don't want to be short anymore. And if the shorts aren't going to be short, then, the quantity declines. And that's really what we're seeing. And as to where it stops, I mean, the squeezes in commodities, are a lot more vicious than any squeeze you see in an investment category like stocks or currencies or bonds or whatever. I mean, you do occasionally get a real sort of squeeze in an individual stock, but in commodities, I mean, this can take a commodity up 3 or 4 times over the period of a quarter or two. And I think we're seeing something like that happening in silver. The price of base metals, a basket of base metals, priced in gold, very recently has been at the lowest level ever, like something like less than 20%. I think something like got down to about 17% of the 1900, I mean, like 125 years ago, value. And this has been, this sell-off has been really over the last 10 years or so. I mean, it really has absolutely collapsed in terms of gold. Now, the obvious story there is that, well, it reflects the gold price rising. The second thing is, who cares about pricing these things in gold? But that shows an ignorance of really what gold is. Gold is stable money. It is money without counterparty risk. It is money which credit used to refer to. And now the credit isn't referring to gold. It is credit that is declining and is messing up quite a lot of relationships on the way. Now, if you accept that gold, and history will prove this, that gold has relatively constant purchasing power over periods of time, then to see the value of a basket of base metals at under 20% of where they were in 1900 and for a long time while there was a gold standard, then you will understand that basket of base metals.
Silver is entering a major structural repricing phase after years of price suppression, much of it linked to China's role as a swing supplier. According to the Silver Institute, the global silver market has operated in a supply deficit for 5 to 6 consecutive years, with above-ground inventories temporarily filling the gap. That balance is now breaking down. India's rapidly expanding economy and government-backed push towards solar energy are driving surging industrial demand, particularly from large photovoltaic manufacturers. These producers must now source silver directly from the open market. Meanwhile, China is preparing export licensing restrictions for 2026 to 2027 to protect domestic supply. Rising silver lease rates and falling COMEX open interest point to tightening physical availability. With Western investor participation still muted, the current rally may represent only the early stages of a much larger silver squeeze. Share your thoughts on his analysis in the comment section below. If you enjoyed this video, like and subscribe to Metal Moves. Stay tuned for sharp insights and real-time updates whenever silver, gold, or key metals make their move.